hard to fault the earnings result yesterday. Very strong growth in the operating earnings and the cash flow. The EPS was up 30%, so it's about a 6% beat in my numbers, mainly to do with a lower effective tax rate. Growth was obviously driven by the Tox acquisition, but Cleanaway had a go at sort of stripping out or having a look at what the underlying organic growth was of the business. And they sort of came up with 9% revenue growth and 14% at the EBITDA line. I had a bit of a crack at it myself. I think it's probably a little bit lower than that after you strip out the synergies they'd be pulling out from Tox as well as major contract wins. I think it's more like a 4% revenue growth, 7% EBITDA growth. So to me, still very respectable numbers for the business that it is. CEO reaffirmed his expectations yesterday that Cleanaway's earnings would be resilient through an economic weakening period. Probably the key negative that I could sort of see in the result was just the higher capital requirements of the business. There was finance leases that I wasn't expecting coming through that was to fund capital. And also the guidance for CapEx applied to net revenue. Well, the net revenues are actually higher than what I was expecting, so that sort of feeds through into higher CapEx also. So if you've got earnings roughly in line, capital requirements and net debt higher, sort of points to a lower valuation. But where there's a will, there's a way. One of the things I was doing within my DCF was I was actually cutting off the growth rates and the cash flows, getting down to steady state, probably quicker than what I actually needed to do. And when I actually adjusted for that, helped out the target price there, offset some of that CapEx impact. So target's now up to $2.01 per share. Obviously, that share price has very much surged through my target price. It'll be interesting to see if the share price performs like it has historically, jumping up at the result and then continuing to improve through that sort of 1 month after that as the management team gets on the road talking to investors, since it's already had such a strong surge. So look, I suppose on a fundamental basis, 9% downside to my target. Stock's now trading on a 10.5 times EV to EBITDA. The large North American peers are trading on 11 to 14 times. If I think about my target price in 1 year's time with that earnings growth coming through and then apply 11 times, you're getting more like a $2.50 type valuation. So that's kind of where the upside is. Stock's obviously quickly closing in on that. So look, yield on this stock, it's not a big part of the story. Even with my forecast 25% increase in the DPS, it's only really trading at about a 2% yield. It's not a big part of the story. So total return basis, fortunately got a downgrade to a hold, but obviously we've made some pretty good money on this stock. So let's just watch it, see if there's any volatility to come through and see if we can get a chance to pick it up again later on.